I'm a technical analyst. I look at chart patterns all the time. Price for me is king. I really don't dive into economics or fundamentals in the market. I'm looking at chart patterns and looking at those repeating patterns all the time, especially in the forex market. I mean, once you've learned the trading patterns that you can identify on a chart, you can trade absolutely anything. To minimise stress, one of the things that I tell my students is to, number one, back test the strategy that they're going to be taking and using. Because if you back test, that builds confidence that the outcome out of a series of trades has been a positive one. And then the next thing is to demo trade correctly. A lot of people just demo trade and just place a trade and just think, well, you know, I'm not going to have a stop in place, and they don't demo and practice correctly. So I would go through a series of trades, something like 25 trades, demo practicing your trade strategy, and test whether you as a trader personally can actually follow that strategy. The most common mistakes, of course, are not having a stop loss in place, which is just a killer for anybody's trading account. But I also think one of the big things is that a lot of new traders, and I did this when I first started, is that they will give up long-term gains for short-term good feeling. And that means basically taking profits too early. And that makes them feel good. And that goes back to the thing about where they have a winning trade, it makes them feel confident, but they give up that long-term gains. So I personally think that you have to get good at letting trades run when you're in a trade so you can maximize that trade. And one of the things I say to my students is just walk away. Just don't look at the screen all day long. If you're in a trade and you're going for a big move, then you need to walk away, because otherwise the emotion is going to kick in, you're going to get out of the trade early, and it's not going to end well.